Welcome. You tune into Market Fatafat, a show where we take you through all the stocks that are buzzing away in trade, either on the back of news flow or on the back of technicals. But first up, let's take stock of how the markets are really shaping up. As of now, what I can see, Nifty there's not much action coming in today. In fact, just a day before Christmas, we are below 23,800 levels right now, but we have managed to recover from the lows though, just up 72 points from the day's low. Nifty Bank is down 90 points. The broader markets are outperforming the benchmark indices, especially the small caps that are trading with gains of 0.4%. Sectorally, the auto pack is leading from the front. Tata Motors, yesterday it was trading close to its 52-week low, has recovered from there on, and it has managed to be, it has managed the recovery that we see coming in today. Besides that, the auto pack, like I mentioned, is doing pretty well. Bharat Forge, on the back of the 500 crore capital infusion in its subsidiary, Bharat Forge, like I said, is doing pretty well. Ashok Leyland, they're all holding on to gains of 1.5% in trade. Yesterday's winners are today's top losers, like metals and the PSU banking pack that did pretty well for themselves yesterday are reeling under a lot of selling pressure today. National Aluminium, SAIL, Tata Steel, they're all trading with cuts of 1.5%. And in the PSU banking space, barring UCO Bank, all the other constituents are trading in the red. Besides that, we have, Adani Enterprises that has been trading as the top Nifty gainer on the back of the news flow that we will be discussing in details. Indigo is a high flyer in trade today, on the back of, the data that's come out from the air traffic, positive data coming in from the air traffic industry, and also the inching up of its market share to record high. Indigo is doing pretty well for itself. Zaggle is in focus today on the back of the QIP, Sagility on the back of the JP Morgan note, and from the realty space we have Oberoi, we have Prestige that is in focus today, and also we have Biocon that is in focus today. So largely that's how the day is shaping up and the stocks that are in focus. But we'll discuss these stocks in details and why they are buzzing.
Absolutely, lots to watch out for in today's trade. On that note, let's kickstart the show and bring you all the big buzzers that are buzzing today on the back of their individual news flows in under a minute. To do so today, we are being joined by Osho Krishan, the Senior Analyst, Technical and Derivative Research at Angel One on the technicals. And from our in-house research team, we have Gaurav joining us. Good afternoon to both of you gentlemen. Thanks so much for joining us, Osho. Before I come to you, I'm going to talk about a big gainer in today's trade, and that is Sagility India. This stock has been locked in upper circuit of 5% ever since the get-go, and this is on the back of a brokerage note coming in by JP Morgan. They've initiated an overweight rating with a target price of 54 rupees per share. And this is the note coming in from JP Morgan, wherein they have a rather bullish stance coming in for Sagility India. They say that it's a niche healthcare player catering largely to the non-discretionary spends, and secular tailwinds from increasing outsourcing in the US healthcare will help this company going forward as well. Deep domain expertise and client relationships should drive increased mining exposure. So that is also something that they're liking, and exposure to non-discretionary spends keeps growth stable is something that they're flagging off for this company. High structural EBIT margins are also something that may aid the company going ahead as well, and they see 50% earnings CAGR over FY24 to 27. All in all, a bullish note coming in from JP Morgan, and on the back of that, Sagility India locked in 5% upper circuit, doing pretty well today.
Alright, that's Sagility India locked in the upper circuit with gains of 5%. Coming to you then, Osho, Lupin is the name that you've picked out for us. Now this stock, in the last 6 months has done pretty well for itself, 39% return. Tell us from here on, the entire pharma pack in fact has done pretty well for itself. But from here on, what's the upside on this counter?
Very good afternoon to both of you and all the viewers of ET Now. Well, looking at the overall trend of Lupin, this counter has been consolidating in a very strong range at the higher levels, and in the last week we have seen a decent movement from the zone of approximately 2050 towards the zone of 2150, and this has made a very strong breakthrough of the swing highs, immediate swing highs. So I'm expecting that from here onwards there can be a continuation to the higher trend in this counter, and the immediate target that comes, that is highly likely to come, is approximately 2250 to 2280. So this is the immediate target that one can expect in the short-term perspective, while any breach above 2280 can give a very strong boost in this counter for higher targets of nearly 2400 from short to medium-term time frame. So one should definitely try to gauge the momentum in the coming period and can accumulate even at these levels for very good returns.
Alright, that's Lupin on the chart, but moving on to another counter that is flying high in today's trading session, and the top Nifty gainer, that's Adani Enterprises, that was up in fact 2.9, almost 3% in trade today. It it has given up those gains, but nonetheless trading with gains of 1.7% right now. The Adani Group has said that they will acquire aviation maintenance, repair and overhaul MRO services firm Airworks for an enterprise value of 400 crore rupees. Now, the Adani Defence System and Technologies has signed a share purchase agreement to acquire 85.8% shareholding in Airworks. Now, India's largest private sector MRO company with the largest pan-India footprint. Now, with the operations spanning 35 cities and a workforce of 1,300 personnel, Airworks will bring extensive expertise in servicing both fixed-wing and rotary-wing aircraft. Now, the acquisition enhances Adani's capabilities in the defence MRO sector, solidifying its position in India's airborne defence ecosystem. And on the back of that, Adani is in focus today as a top Nifty gainer.
Okay, Adani Enterprises holding up pretty smartly, almost 2% higher. But on that note, Osho, coming back to you for a tech check, you picked out IPCA Labs on the chart for us. Last 1 year, this stock has given roughly 45 to 50% returns. It's been simmering down slightly ever since then, because last 6 months also, it's done pretty well. Last 1 month, it seems to have been under slight amount of pressure. Tell us what's the outlook going ahead and what are the levels that you're spotting for this stock on the charts?
See, overall, this counter has been into a very strong consolidation, or we can say even this counter is into a time-wise corrective phase from the higher zone of nearly 1650, and on the lower side 1500 is being very strong support for this counter. But overall trend and overall momentum is still persist in this counter, and I am expecting that it is on the verge of giving a fresh breakout around the zone of 1600, and the time we witness a breakout or decisive surge above 1600, then we can see another set of rally of nearly 100 points in the short term period. So for that, the target will be approximately 1700 odd points. But overall, the counter is very bullish, and the time it witnesses a breakout above 1700, then we can even witness another 200 point of rally. So from medium term perspective, 1900 should be seen as a target, and for short term perspective, 1700 can be seen as the first target.
All right, moving on from IPCA Labs, coming to you, Gaurav, you picked out Indigo, a high flyer in trade today. Tell us what's the news flow here?
Yes, Indigo is in focus today, and the reason being that when we look at the domestic volumes data from the airline industry, we have seen passenger has grown almost by 12% on a year-on-year basis. Specifically in the month of November itself, the industry achieved a milestone of around more than 500,000 domestic passengers. And within this, when we talk about Indigo specifically, the passenger load factor has now climbed to around 90%, which is the best in the last the last 5 years. And lastly, when we talk about Indigo's market share, that has now increased almost at 30 basis points on a month-on-month basis. Now the market share has gone up to 63.6%, so it's a huge amount when we talk about market share. When we talk about other players, Indigo has taken this market share specifically from Air India, whereas SpiceJet also gained some of the market share. On the back of this news, when we talk about the stock price, it has reacted positively. It is up more than 3.5%. So definitely watching out on Indigo on the back of the market share gain as well as the new record that they have achieved in the month of November.
It's absolutely a high flyer in trade today indeed is Indigo, Interglobe Aviation rather. But let's move on, and Osho, you've picked out Kandal International for us on the charts. Last 1 month it's not done much. Last 3 months a 13% return coming in on the stock. Tell us what's your outlook going ahead, and do you believe that the way the stock has been tapering down, do you believe that we're headed for a consolidation, or are you spotting better days on the charts for the stock going ahead? I believe you'll have to unmute yourself.
I'm really sorry. The technical structure is very positive for this counter. The counter has been hovering into a higher highs, higher lows kind of a pattern on a broader time frame chart, and even in the short term perspective, the 50-day exponential moving average has been acting as a very strong support for this counter. So I'm expecting that in the recent period, the counter is consolidating near the 20-day exponential moving average, and the overall trend still looks very positive to me. So any dip towards the zone of 1800 or 1780 should be auguring very well for the buyers, and the higher target is approximately 1900 followed by 2000 in short term period. So one can definitely stay intact there with the investment in Coromandel for a higher targets of nearly 2000 in short term time frame.
All right, with that, it's time for a quick breather. You don't go anywhere. After the break, we're getting you all the other buzzers in trade. Stay tuned.
there. Welcome back to Market Fatafat. You're watching ET now. Let's keep it going with all the stocks that are in focus. Before we do that, take a look at the bottom of your screen. Nifty has shifted over to the red. There's been a 0.5% fall coming in from the day's highest point, a 120 point fall coming in for the Nifty. We've slipped below the 23,750 levels as well on the Nifty, nominally in the red. Also accompanying Nifty in the red is Sensex right now, because that has also managed to slip 0.5% from the day's highest point and below the 78,500 thereabouts. So the 78,500 marks is where the Sensex is right now. Nifty small cap seems to be holding on to some gains, but it's the mid cap that is also ailing along with the Nifty as well as the Sensex. Mid cap index 2 very marginally in the red, hovering near that 57,000 mark. That's what the markets are up to right now. Sensex also, like we mentioned, 0.5% fall coming in. Markets not seeming to be doing all that well. Small cap holding on to some gains. But on that note, let's keep it going with the show then, and let's talk about Oberoi Realty. This stock has also been doing pretty well in today's trading session. The company has acquired 81 acres of land in the coastal town of Alibag near Mumbai, and the company has announced late last evening its plans to develop a luxury hotel and branded residence villas as part of this project. The company said that it has executed a development agreement for the development of land measuring approximately 81 acres situated in Alibag, and out of the above land worth 8.6 acres shall be earmarked and conveyed to the company for the construction of the high-end luxury of 5-star hotel and resort, and the company has informed this in a regulatory filing. Further, when it comes to the remaining 72.5 acres of land, the company intends to construct approximately 150 high-end luxury fully serviced branded residential villas. According to the company, the consideration for the transaction to the landowners is in form of revenue and area share from the said residential project, and upon executing the above agreement, the company has informed that they have taken physical possession of this land. Positive news flow coming in, very ambitious plans coming in, although we don't have an eye on the GDV right now. That's something the company has not revealed, but looking good for the company right now, and 1.5% higher is where Oberoi Realty is right now.
And while keeping it with the realty pack, then real estate is poised to have an upcycle for the next 2 to 3 years. That is the word coming by Gautam Duggal, who's the head of research institutional equities, Motilal Oswal. Let's go across and listen into what else he had to say about the sector.
Real estate and hotels both have a very similar characteristics in terms of the duration of cycle. 2008 was the peak of both real estate and hotel cycle, and it took them 12 years to come back to that upcycle. If you look at the largest hotel company in India and check their EBITDA of 2008 and 2018, they're virtually similar. So our view is that in both hotels and real estate, we are somewhere in the middle of the upcycle. The demand-supply dynamics in terms of demand CAGR versus supply CAGR is very predominantly tilted in favor of demand, which is why a year back also, when a lot of the people were raising questions on valuations of these two sectors, we were of the view that given the duration of the upcycle, which is still left in this space, we continue to like them. So we have preference towards both hotels and real estate, which occupy more than 5-6% in our model portfolio. So clearly, the fundamentals of the space have been very strong, and given the way things are unfolding, we think that at least 2-3 years of upcycle is still left in the spaces.
Okay, that's the word coming in from Gautam Duggal, overweight on the real estate space. That's his view. But let's move on then. And Osho, coming to you for Jubilant Foods, you've picked out this stock for us on the charts. Last 6 months, a roughly 20% return is what this stock has given. But compared to other stocks in the QSR space, this stock seems to have done pretty well, even when it comes to the fundamentals. Tell us, what are the levels that you're spotting for Jubilant Foods, and is this your preferred play from the entire QSR space?
See, overall, this counter has seen a very strong movement from the zone of nearly 580 towards 700 now, and it is also forming a very strong pattern, a bullish pattern on the daily time frame chart. So any breakout above the zone of 710 can give a very strong boost to the counter. Approximately 770 should be seen as the first intermediate target in the short-term period, but overall technical structure even prevails a higher target of nearly 840 to 850 from a medium-term time frame. But for the short term, the time it surpasses the zone of 710, we can see a very decisive upsurge of approximately 60 points in a very short-term time frame. So one can definitely try to accumulate this momentum coming in this counter for short-term perspective, and even on a longer duration also the chart structure is very positive. So one should even look for investment purpose in this counter.
All right, moving on from Jubilant Food to Biocon, that is in focus today. In fact, it was trading with gains of over 4% in the morning. Well, Biocon has said that the company and Zentiva, its European partner, have received a decentralized procedure (DCP) approval for its complex formulation liraglutide in European Union. The approval is for the generic version of Victoza to treat type 2 diabetes and Saxenda used in the treatment of weight management. And on the back of this approval in European Union, Biocon is holding on to gains of 4% in trade.
Okay, very good moves coming in for Biocon today, but a stock that's been doing well ever since the get-go is also Bharat Forge today. Gaurav, tell us why the stock has been holding on to gains, and tell us what's the news flow as well.
Well, yes, Bharat Forge is in focus because company has now approved an infusion of up to $64.5 million in one of its wholly owned subsidiaries, Bharat Forge America. Now, what they will do is that there are three investments that they will be doing. The first will be 19.5 million in BFA, which is Bharat Forge America. Second is that 30 million will be invested in Bharat Forge Aluminium, and the third will be invested in $15 million, which will be invested in Bharat Forge PMT. Now, with this, when we talk about the entire infusion, the infusion will be used to utilize and utilized for prepayment and repayment of certain outstanding borrowings of the companies. Now, when we talk about these companies, they also have strong financials. So, when we talk about turnover, Bharat Forge America has a turnover of around $4.2 million, while Bharat Forge Aluminium had a turnover of around $60 million in the last year, lastly, Bharat Forge PMT had turnover of around $38 million. So, definitely a positive news flow coming up for Bharat Forge, and given this positive news flow, we are already seeing a positive momentum in the stock price as well.
Okay, well, that's the news flow on the reason why Bharat Forge is buzzing in today's trade. But let's move on then, and we'll bring you a story now. Government urges domestic electronic manufacturing companies to boost production to 2 to 3 million units in 2025. Now, why this demand and what's the rationale behind this? My colleague Sumita is joining us with all of those exclusive details. Take it away, Sumita.
Yes, sources suggest that government has told IT hardware companies and their domestic manufacturing partners to start increasing production capacities of IT hardware in the country. And of course, these companies include Dell, HP, Asus, Lenovo, amongst others. Now, domestic EMS companies are hence expected to produce 2 to 3 million units of IT hardware in 2025. Remember, this is in line with what India is looking at with respect to its goal of $300 billion in electronics manufacturing by 2025-26 is concerned. And the IT hardware market as of now includes laptops, desktops, tablets and small servers as well. It's pegged at $400 billion. But India accounts for just about 1% of its production, and 90% of IT hardware sold in India is imported according to industry estimates. Now, the government also, to keep the domestic demand in mind, the government has also extended that import monitoring system for a year. It was set up in 2023, wherein restrictions on the import of laptops, tablets and PCs were announced. Now, government could look at, once domestic manufacturing is ramped up, the government could look at reducing these imports annually from 2025.
Well, with that, it's time for us to slip into a short break. You don't go anywhere. We'll be right back.
If you like this video, then like, share and subscribe to ET Now.